central casting for the tokenization of the future. Number 4, tokenization is a bigger unlock for Wall Street than many appreciate. And I think that many people think tokenization is simply digitizing assets. I think that's an oversimplification of the unlock that's coming.
The speaker argues the crypto supercycle is intact and is especially bullish on Ethereum. He notes that despite recent price weakness, adoption, regulation, and institutional interest are surging, with tokenization of real-world assets as the key long-term driver. He believes the traditional 4-year Bitcoin cycle will break as macro and industrial cycles change, and expects new highs soon. Ethereum, he says, is becoming the core smart contract and tokenization platform, making it the future of finance. Finally, he highlights digital asset treasury firms like MicroStrategy and BitMine, claiming they can even outperform the underlying crypto via staking and scale.
And number 5, why I think a proper digital asset treasury company like MicroStrategy or BitMine play a central role in what's going to happen. And in fact, you may outperform the crypto itself by owning a digital asset treasury. Okay, so 2025 is all about tokenization, but let me level set for a bit, and let's look back at the last 10 years. In December 2016, okay, you could have said, I want to own the S&P, and you would have tripled your money, which is pretty good. You could have bought gold, because you might have been a gold bug, and you quadrupled your money. They launched that only a year and a half ago, and it is one of their most profitable ever ETF products. Now, JP Morgan, which as you know, has been a hater of crypto for many years, is launching a JP Morgan coin on Ethereum, but they're not the only ones, there's others. Tokenization has become a big buzzword and priority for all these major financial institutions. And then these last 2 things are probably more important than you realize. There have been probably 3 breakout products that are crypto native that have changed how traditional financial markets make decisions. One example is Polymarket, which really used prediction markets to actually generate so much information that, I mean, at Fundstrat, I think it's the closest thing to a crystal ball. And then Tether has proven to be the top 10 most profitable bank in the world. I mean, think about that. It's a crypto native, singular line, monoline business, and it's one of the top 10 most profitable banks in the world. Individuals around the world with more than $10,000 in their retirement accounts. So if Bitcoin were to be held by all these accounts, that's a 200 times increase in adoption. That's still, to me, exponential and hypergrowth. And Bank of America Fund Manager Survey still shows 67% of fund managers have 0 allocation to Bitcoin. Wall Street wants to tokenize all financial products. And keep in mind, financial products today, if you include real estate, you know, it's almost $1 quadrillion that they want to put onto the blockchain. And then, of course, in the agentic world, it's going to create a need for decentralized trust and security, of course, which is what blockchain solves. So to me, I think the best years are still ahead. Okay. So let me explain to you why I think crypto prices have bottomed. First of all, crypto is acting like there's a crypto winter because gold's up 61% year to date, treasuries from indexes, and of course, Tether got a ratings downgrade. So maybe some of these could explain why crypto is down. But just keep in mind, crypto was up 36% until October 10th, and then it's gone straight down. I personally think it has a lot to do with deleveraging. And as you know, after the FTX collapse, it did take 8 weeks before market makers recovered and crypto could start to see price discovery again. And we're basically 7.5 weeks past that event. Now, Bitcoin made a decision about 5 weeks ago to engage Tom DeMark because we wanted to understand what was happening with crypto prices. Now, if you don't know who Tom DeMark is, he's a legendary market timer. At Fundstrat, I've used him to call two of the major market lows, the March 2020 low and the April tariff lows. Those were all in coordinated margin debt. But the two things that I think have actually become more important in our view is gold versus copper, and then the ISM, which is just your traditional economic business cycle. So let me explain. So the halving could explain Bitcoin because the halving is pre-computed, but the problem with the halving cycle explaining Bitcoin's price is that there's a lot of other things that have a 4-year cycle. Presidential elections, Olympics, World Cup, etc. But there are some things that follow a 4-year price cycle that no longer follow a 4-year price cycle. And one of them is copper versus gold. And this is a tweet from AO BTC analyst. And we decided to recreate it, which is, let's look at the ratio of copper prices, which is measuring industrial activity, to monetary base, which is gold. And in the past, you can see it had a dedicated videos explaining this, so I'm not going to spend much time on it today. But what I'm saying is that in 1971, the dollar went off the gold standard. And in 1971, it galvanized Wall Street to create financial products to make sure the dollar would be the reserve currency. Well, in 2025, we're tokenizing everything. So it's not just the dollar that's getting tokenized, but it's stocks, bonds, real estate. And Wall Street is again going to take advantage of that and create products onto a smart contract platform. And where they're building this is on Ethereum. This is a list of basically every major financial institution, and they're building products on the blockchain. And today, if you look at the share of real-world assets, and the prior panel talked about that, the majority of this, the vast majority, is. And there's 5 reasons tokenization unlocks things, okay? It's fractional ownership. It does reduce cost. It allows 24/7 global trading. There's more transparency. And in theory, there's more liquidity, okay? But I would say that these are just the raw ingredients. And in our minds, tokenization is actually going to take Wall Street into a next level of evolution. And what I mean by that is we have to understand what you can do differently if you begin to tokenize assets, especially combining it with prediction markets. For instance, most people who are talking about tokenization of the stock, and everything else is the other time periods. The second example is product tokenization. We know Tesla is EVs, robotaxis, full self-driving. I don't even have Optimus Prime, solar, but of course, ultimately, the biggest value of Tesla is Elon himself. So if you could tokenize Tesla stock, you could isolate the implied value of just buying in Elon Musk himself. And as you know, he's an N equals 1 person. Okay, so that's tokenization. I think, of course, you need smart contracts and prediction markets, and really working in conjunction with both is what is, in our view, a huge unlock. And in fact, BitMine is trying to find projects that are really moving this forward. So that gets us to the last point, which is the 39th most traded stock in America today. And as I zoom in here, you can see it trades more trading volume than General Electric, which has 30 times the market cap. And it trades almost the same trading volume as Salesforce.com, which is 20 times the market cap. So these two companies, according to the equity world, are extremely relevant. In fact, BitMine and MicroStrategy account for 92% of all crypto treasury trading volume. There's 80 crypto treasuries, and these two companies have Maven, our staking solution, and when it's fully implemented, using the Caesar index, we should generate about 2.9% staking yield on our Ethereum holdings. That's about $400 million a year in net income, or $1.3 million a day. I mean, think about that for a moment. I mean, that's a lot of money. And it's done with a completely clean balance sheet. BitMine has over $12 billion worth of Ethereum, a little bit of Bitcoin, some moonshot investments, and about $900 million of cash. So there's no debt. But that's only part of it. As you can see, this is part of a DeFi strategy. The first was BitMine is doing moonshot investments. It made a big investment in a cut of its own technology. So the roadmap looks good for us. We have a Made in America validator network, which is Maven. We're really investing in the crypto community and in BitMine moonshots, and of course, targeting at least 5% of the Ethereum network.